Hello and welcome to the video update. My name's Scott and this is edition number 28 now of the market update. I'll be taking you through what's happened over the markets over the last few weeks and what could be changing them this week in terms of upward or downward pressures. So let's begin by looking at gas prices and see what's happened. So week to week, we've seen gas prices rise by 4% or so. Now that is quite minimal compared to what we're used to seeing in recent months. And if you look at this graph, which is from March this year to present, we can see in the last few days or so, prices have been flattening out really, slightly increasing overall as the trend. And if you read our daily reports, you'll be noticing on the commentary, we've been mentioning how the market has kind of flattened out now. It's at a resistant point where it's not looking to go much lower, but we'll see in the next few weeks if that is the case or not. But right now that's the case with gas, minimal change really week to week. Power is a little bit more significant, so it has increased by 9% or so. It has a couple of bullish drivers affecting it, notably lower wind speeds, which I'll get onto. But we can see power prices kind of dipped at mid-November and they've been on an increase ever since. So yeah, a little bit more notable increase in power prices there. And if we look at the day ahead market, this is an interesting one. So while the forward curves have been quite flat and steady, the day ahead market has shot up in value over the last couple of days or so. So quite a dramatic increase in day ahead valuations there. Now, this is a very volatile market and you'll see previous spikes were very short-lived. So I wouldn't be surprised if this one's short-lived as well. Yesterday and today particularly are very tight days on the grid, and that will be why the day-ahead market has risen so much in value. But yeah, you can see the valuations there. Gas day-ahead closed at 272 pence a firm, power at 385. So that's pretty much in line, if not above, the forward curve prices for December. So what happened last week and over the last couple of weeks? We have seen a few things that have contributed to prices going up. So the first big one was the outage at several Norwegian gas fields, which caused supply disruption, particularly on the day ahead market. So the main one is the Asgard field, which has taken around 20 million cubic meters a day of gas off supply. So that's quite large and did create some tightness. This was resolved on the 19th of November, but for a week or two, that was an issue that the market had to kind of factor in and price accordingly. The next one was delays to EDF's nuclear restart kind of schedule. It's no shock to see delays. We see them quite frequently with EDF and their nuclear plants. But 6 reactors in total have been delayed, and this does leave France in a bit of a challenging position for this winter, where it is sometimes an export nation at times, that the likelihood of it being an export nation is now reduced, with it needing to facilitate its own energy needs with reduced nuclear output. So that has risen prices across Europe really, and it's one to definitely keep an eye on going forward. And then last week was a kind of pivot moment in terms of storage levels. So up until now, storage levels have been climbing. EU on average at 95% or more. But last week we did see withdrawals start to outpace injections into storage. So you'll often see this around November time. It's a transition month between autumn and winter that this kind of happens, and this year's no exception. So we're seeing probably storage levels cap out last week, and then we'll start to see them start to decline as we head into December, into the proper winter months. Looking at this week then, there's a few things to note. So last week and likely this week was the topic of Gazprom threatening to cut supply through Ukraine. They have been citing gas theft and redirection of supply. So that's their reasoning why. Fears have now eased with Moldova making a required payment. So that has eased fees, at least for December, with Gazprom having to now fulfill that contract. But of course, with an actual European war taking place on this transit route in Ukraine, Nothing's really out of the question. So that's one to keep an eye on. But as I say, fears have eased slightly with Moldova making that payment. Next is wind speeds are set to drop. So for November at least, wind speeds have been really quite high, and the market has benefited from that. That's not going to be the case for at least the first week of December or so, where forecasts are set to kind of drop quite a lot in wind generation. So that's going to leave the day-ahead market and those near-term prices pressured a bit. So we'll keep an eye on that, and the day-ahead market could potentially start running up higher, particularly on the power side of things, which is impacted most by wind speed generation. And then the other thing is temperatures are set to get colder. So that's no surprise really as we enter December. But what is different is compared to the last couple of months where temperatures have been above seasonal averages, for the first half of December at least, it's set to be a couple degrees below seasonal averages. So that is a shift in the dynamic there of what we've been used to seeing over the last 2 months. So it will get colder naturally, but it will get more colder than we're used to seeing for the first half of December, as that mild weather really kind of ends for this year at least. That's it for today's update. As always, there are further information sources you can get from our website, where we post daily market updates, which you can subscribe to. And we do have the Market Watch Live team if you need to chat to anyone. They're available to talk to between 10 and 12, Monday to Friday. That's it for this week. I'll look forward to seeing you again next week for the next market update. Thank you.